Hi traders, it's Chris. Hope you're having a wonderful weekend. This is a gold market recap from the last week, and I think it's probably quite helpful to understand the golden rules within the gold on steroid software so that you get a better understanding of how to make more money, and in particular to show you the rules that have to take place before entering into a trade. And I'll be dialing down into the charts, the lower time frames, in the next few minutes as well. So let's look at Monday. So Monday morning on the 3rd of February, there was a lovely outside bar. So let me explain, those who don't know. We're looking for the price to move outside of this channel, if you can see that. Whenever the price moves outside the channel, it's gone too far too quickly. And there's highly likely to be a reversal or a continuation. So look out for that. So there's one there. There's one there, there's one there, there's one there, and so on and so forth. I'll go through the charts to explain. So the other thing that has to happen, and in an ideal world, is to ensure that the money flow has gone into overbought territory. So above 80, in other words, the buyers have stepped in overnight and it's gone too far, and so the money is going to run dry. And so therefore the price has to give way and fall down. That's the way it works. That's the way it's always worked. These are special settings, of course, and have been tested many thousands of times over many years. So once we get this situation here where the price has gone outside the channel, the price has gone too far too quickly. You definitely don't want to be selling here. The market is trying to grab the sellers. Stop hunters, they're called in the institutions. They are looking for you to grab and sell this right here, right now, anywhere there, and then they take your stops. That's how it works. So once you see the money flow oversold on this 30-minute chart, it's a really important point to actually say, hold on a sec, something's going on here. We've got an outside bar, as I call it, and so the price has come outside the channel, and so therefore there's highly likely to be at least a correction, if not a change of direction or change of character. So that's the basic rules of trading. So let's have a look at points where you could have got in, and then I'll go into dial into the charts into the lower time frame where you have strict entries for confirmation on any reversal. Now, many thousands and thousands of traders out there are looking for reversal patterns because they are highly lucrative. Very rare do you get these situations. Well, the situations are common, but very rare do you find anyone successful at it. That's the point. So once you have the settings, we're just looking for that, and we're looking to get into this trade. So there's 247 pips on Monday from 6 a.m. So let's have a look at another situation here. So let's have a look at this here. You have a situation here where you've got an outside bar, and look at the money flow. It is overbought. Overbought indicates the price is going to go down. That's 174 pips. Here's another one here. Notice this red and green line. This is a 50 EMA. The 50 EMA, I've been using the 50 EMA since 1982 buying stocks, and it's highly, highly lucrative and highly successful. Whenever the price moves below the 50, it's weak. Whenever it moves above the 50, it's strong, weak, strong, etc. So that's one of the trading rules as well. Here's a trade here. Have a look at that. That cropped up. It's not an outside bar, but it's come up to the 50 EMA. And you have money flow overbought. So the price has to give way. It has no choice. It's run out of steam. And there's that's just 139 pips. Let's zoom in a little bit. Probably easier to see. So we have another outside buy here on demand. That's exactly what we were looking for. And look at the money flow. Okay, that's just 197 pips to the previous high. Now in this instance, this is a continuation pattern. Whenever you see the price move below the 50, this indicates that the price is actually bullish. But look at the colour of the moving average. It's green. So that indicates that the price is in a continuation pattern. Wait for the price to come above the 50 and then buy it and then go 2 to 1, 130 pips. Now this is the situation which we love. I've lost my smiley face now, there it is. So this is what we love, outside bar. The price has gone up too quickly, too fast, and we've got an overbought situation here and plus divergence. We probably had a supply zone as well, which has been taken out, but nonetheless a very important point to actually get 201 pips to the bottom of the previous candle. It actually went a lot further, didn't it? But never mind. And in this situation here, notice the outside bar, outside the channel. Price can't go any further down. It has to bounce, and there's 171 pips. The most recent move, which was Thursday. Actually, we had one here as well. Let's do that one over here. We had a long position down here. One's 28.75 we went to, so somewhere like that. VIP members will understand that completely. So here we have the price has gone down too far and the money flow is oversold and the price is outside the channel. A reversal or a correction is likely, and so you get in and you bank another 247 pips. The last one we had on Friday after the NFP, once the market settled down, it came down back onto support. Very, very common pattern with positive divergence indicated by the gold on steroid software, and the price zoomed up and we banked 179 pips according to that. So some nice moves here, and hopefully some of you, especially VIP members, got most of those. But it's a fantastic system. So let's have a look at the results for this week. If you have the software and if you used it properly, then you had plus 247 pips on Monday. Tuesday we had 139 pips. Same day, Tuesday, we had 197 pips. Wednesday, 130 pips. Wednesday, 201 pips. Thursday, 171 pips. Thursday, 247 pips overnight, and then lastly Friday non-farm payroll 179 pips. So let's go closer to the market to see where we could get in and get a strict entry point, because it's really crucial, this bit, because if you don't get this right, then where do you enter and how do you get in? So let's have a look at this. So let's have a look at Friday as an example. This will line up nicely. Let's get rid of the money flow because we know all about that by now. We've still got all the support lines on there, but and FVGs. But there's a potential sell there in hindsight, of course, but the money flow didn't agree. So we didn't trade that one, but you could have done if you wanted to, felt brave. So the key to this is to wait for the 5-minute chart for the candles to go red and below the white line. That is a good one. And just wait for the candles to go above the white line and to go 2 to 1. 179 pips. Let's rewind to some of these because it's important to get these right. Just squeeze that up so we can actually get into the positions quicker. So there's a good position there. See how this is a 5-minute chart. You can use 10-minute. You often use 10-minute. But see how, as an example, that you might be tempted to get in here. You wouldn't be, because the money flows. Let's talk about this. So let's line this up here. See this down here. Look on the left bottom and look at the money flow. Which direction is the money flow going? Number one. And is the money flow oversold at this point? You have to say no. Is the money flow oversold at this point on this demand area? Yes. So just wait for the price to go green. Just wait for the price to go green, and then the candles will move above the white line. There was a trade here. Can you see it on the left now? Have a look here. This is magic. So, well, we didn't trade it, but it's not the point. The point here is that it's a system which you might want to get interested in. If you're not excited about this, then you can't get excited about anything. Have a look at the money flow on the left. Have a look at the 5-minute chart on the right. Outside bar. Outside the channel, the price has gone up too quickly, too fast. And it's like a fish out of water. It cannot stay up there. And as you see, you can get into this here, short here. You can wait for the change of character if you want. Totally up to you. And that's the potential trade there. Let's do a few more, shall we? Bit of fun. Okay, there's another one. Look on the left. Look at the money flow on the left. Really important. Okay, special settings. And then the outside bar again. Really important. So the key to this and your success is to ensure that you've got, firstly, a number one outside bar outside the channel on the 30-minute chart, plus the confluence of the money flow being overbought or oversold, because that's the key. Getting into the position here, is when you see the price go up. And what was that? That was only 171 pips. Let's do another one. Bit of fun, isn't it? Oh, this one there, we can see that. Let's line that up. And the more you practice this, the better. So use a demo account. Get used to it, because this is life-changing stuff. So we had the rally. Wasn't a buy for us, but we did have an outside bar, as indicated here. And then the price went down, and you're waiting for the price to come below the white line. So your stop is up there, and your target got hit down here. That's only 201 pips, and a risk reward of 2 times. So there's a continuation pattern here. So let's go rewind to here. We can see that on the 5-minute chart. You can use a 10-minute, it's no problem, but just wait for the price to come above the 50 EMA, and then you've got buy signal here, buy signal, buy signal, buy signal, and just wait for the price, the candles to go green. Yes, you can wait for breaker structure if you want to. Break a structure, break a structure, break a structure, break a structure. Totally up to you. Let's look at another one. We might as well do these while we're here, mightn't we? What else are we going to do? Right, there we are. So there it is there. So that's the downward move we had. Let's do this one first. So we had an outside bar. Lost my tools, and we have money flow overbought, really important, and we've probably got divergence there as well. Just wait for the price to come up, wait for a change of character there. You could go in there, you could go in there, you could go in there, as early as you want to, because you've got enough information to say the price is going to have a nice move. That's just 197 pips. Let's have a look at the down move. You're getting the hang of this, I hope. You're getting the hang of this. So we had money flow. We didn't have an outside bar on this one, which is interesting, but it did come up and it tested the 50 EMA with divergence. So this is confluence of the best kind, because we have divergence, not necessarily MACD divergence. There is negative divergence indicated by red. If you can see this here, this is red. So therefore it's highly likely to go down, testing the 50 EMA, and then over money flow's gone to the top. So that's your sell there, and that's just 139 pips. Last one. Let's rewind to this one. This is a nice one, isn't it? This is a nice one. There we go. So that's the finish there. We can see that there. And we can see the change of character here. So you get in there, you could get in there, you could get in there, you could get in there. It's totally up to you. And that's just 247 pips. So if you've got any questions on that, please let me know. That's the results for this week, and I'll be probably doing end of day gold trading analysis, I guess, just to help people learn how to trade like a professional.